Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode of ESG Talks, Steve Weinstein, chair of the Bermuda Business Development Authority, moderates a conversation between Jim Nadler, KBRA's president and CEO, and Bermuda's Minister of Finance, the Honorable Curtis L. Dickinson. Minister Dickinson was elected to Bermuda's House of Assembly in June 2018 and became Minister of Finance in November 2018. Minister Dickinson was a former executive vice president and group head of private banking at Butterfield Group, and previously worked in the US and the UK as an investment banker raising capital for companies in the media and telecommunications and consumer and retail industries. Mr. Dickinson's board experience includes being chair of the Bermuda Hospitals Board, trustee of the Montessori Education Trust, chair of the Board of Education, deputy chair of the Bermuda Economic Development Corporation, and director of the Bermuda Land Development Company.
Well, thank you very much, Emily, for that very kind introduction. This is Steve Weinstein, and I am the chair of the Bermuda Business Development Agency. We are a unique public-private partnership tasked with fostering and supporting Bermuda's economic prosperity and growth and the sustainable, equitable maintenance of our economy over time. Currently, some of our key initiatives are linked to the themes that we're about to discuss with you today, helping to establish Bermuda as a hub for climate risk finance, building upon our decades of expertise in climate-driven reinsurance coverages, and more broadly establishing Bermuda's, encouraging its leadership position in respect of climate innovation. It's a thrill to be here with you today and to moderate these two leaders in the markets and in Bermuda. So let's get right to it. Colleagues, as you know, the rise of ESG investing has pushed ESG topics, environmental, social, and governance, including climate change and diversity inclusion, to the forefront of discussions in boardrooms, portfolio decisions, and for leaders. How, in your view, has the momentum around ESG integration and investment decisions shaped the narrative for both government and regulators on the one hand and financial market participants on the other? And with that, why don't we ask you to kick us off, Jim?
Hi, thanks, Steve. This is Jim Nadler from KBRA. You know, that's a great question. And I think the most important aspect of it is the momentum around ESG investing and the conversation around ESG that has brought things like stakeholder preferences and climate change to the forefront of almost every discussion that you have, whether we're talking to investors, issuers, regulators, or investment bankers. At some point in the conversation, regardless of the sector, the issues around ESG, whether it's climate change or stakeholder preference, are now part of that conversation. The focus on ESG has had a positive effect. I think we're finding that there's broad awareness now of the importance of having a plan. About, I would say, a year ago when we began to talk to some of our clients in the financial institution space about climate change and ESG, they really didn't have a lot to say. Today, when you have those conversations, not only do they have a lot to say about it, but they also have a plan and they have a lot of information that they can disclose to investors. And I think that's important to think about. And the idea, when you're around the idea of stakeholders and having an impact on these various companies. Last thing I'll say is in the governmental realm and regulatory functions around the world, we're seeing an increase in those conversations as well. And on the one hand, I think it's positive, the fact that governments are spending more time talking about ESG, talking about stakeholders, and talking about climate change. On the other hand, we do worry about regulation in the sense that we all know that regulators can be sort of heavy-handed, and we want to make sure that before we see regulation, that there's been a thorough understanding of the impact of potential regulation so that we don't end up in a situation where we have unintended consequences that can be either benign or negative, and that the regulation doesn't really achieve its ultimate goal. And so I think we spend a lot of time with regulators around the world. And it's one of the reasons that we find Bermuda such an inviting place to have these conversations. And I know Minister Dickinson is going to talk about Bermuda's leadership in this role. But as a rating agency and as someone who deals with the government, I will say that they're on the cutting edge of these discussions around climate change around stakeholder preferences. And that's important because they can be an important voice on the governmental and regulatory front.
Jim, thank you for that. That's the perfect segue to Minister Dickinson. Good morning.
Hi, Steve. Hi, Jim. Thanks. This is Curtis Dickinson from the government of Bermuda. Bermuda's interests and involvement in ESG matters has shaped the development of the Bermuda culture and economy over the years. Given our leadership in key areas, we are keen to tell our story, hence our involvement in today's podcast. As Jim has mentioned, the shift towards ESG investing has been a positive development, causing companies to move away from the single-minded focus on quarterly earnings and encouraging them to also consider the impact of their actions on the wider global community. Regulators have likewise seen the importance of this more balanced approach and have had to pivot to include not just consideration of soundness and stability requirements, which are certainly important, but also develop an increasingly greater focus on ESG matters in their approach to supervision. As an example, Bermuda's Integrated Financial Services Regulator, the BMA, has already been internationally recognized for a supervisory approach, particularly for commercial insurance and reinsurance. Earlier this year, the BMA introduced an expert regulatory and supervisory team to specialize in the licensing and supervision of innovative business models to address climate change and the associated protection gaps. Bermuda is certainly well known for our expertise in insurance and reinsurance and insurance-linked securities, and the innovative approaches that we've taken to support the ongoing growth of this financial sector. Climate risk is already a major focus for the insurance and reinsurance sector. And in that regard, Bermuda can be a center for developing new climate risk finance products to assist with managing the impact of climate change. From a country perspective, Bermuda has for many years put a strong focus on broader environmental matters, continually progressing its work to address social issues, and continues to develop governance requirements and standards to the corporate and financial services regimes.
Minister Dickinson, thank you for that. That's a great initial survey of some of our key initiatives to build upon our prior leadership and expand into these exciting new verticals. I wonder if we can stay with you a little bit and ask you to dig a little bit more deeper into your views as to why Bermuda may be so well positioned to establish itself as a hub for climate risk financing and more broadly climate innovation.
Well, Steve, Bermuda is already known as the world's risk capital, as it is one of the largest reinsurance hubs in the world alongside London and New York. The island's insurance services account for approximately 1/3 of the world's reinsurance capacity. It therefore follows that we have a large number of insurance and reinsurance companies that are located here. Many of these companies, especially in the P&C space, provide coverage for catastrophes all over the world. Climate change is a natural extension of the products that these companies currently have. Bermuda is also the global leader in the issuance of insurance-linked securities, particularly cat bonds. The Bermuda Stock Exchange is the listing home for approximately 93% of the $46.4 billion of cat bonds and outstanding ILS risk capital. As Bermuda is already an expert in cat finance risk, climate vertical complements our globally recognized strengths in reinsurance, ILS, and professional services. Bermuda also has a wealth of climate change-related risk experts already located on the ground here, including scientists in the public and third sectors. By way of example, the Bermuda Institute of Ocean Sciences, otherwise known as BIOS, has a history of supporting the reinsurance sector. And in 1994, BIOS established the Risk Prediction Initiative, a collaboration of BIOS scientists and reinsurance experts. The government certainly has also had a role to play and has been actively and proactively taking steps to create an environment that allows for quality business to operate in an efficient and effective manner. A commitment to sound and effective regulation, policies and practices that promote good, ethical, and innovative businesses, and an appropriate partnership with industry to advance initiatives that can be mutually beneficial and for the greater good. That's the role the government sees as being very, very critical. Bermuda certainly aims to become the world's climate risk finance capital by addressing critical needs in key markets and closing the global protection gap while creating new economic growth opportunities. It is our view that climate risk finance space is an extension of what we already do very well.
Minister, thank you for that. And I certainly endorse all those views and will assert them as factually validated. And if I could take the moderator's liberty of adding one component, as you touched upon the strength of Bermuda's human capital in the private sector, on a per capita basis as well in government, in our consolidated unified regulator, there's more per capita expertise in understanding how climate risk resides on a balance sheet as a result of those decades of leadership than any place in the world. And that, of course, is the regulator that the Ministry of Finance collaborates with so closely. Jim, listening to all of that and with your expertise and history in our market, you have lots of background and large presence in Bermuda and its market. How do you and KBRA see the island in our financial services sector fitting into this broader conversation around climate mitigation and transition and ESG more broadly?
I think Minister Dickinson pointed to two aspects of it that I think are critically important. First is the fact that Bermuda is an island in the middle of the Atlantic. So it's sort of ground zero for the effects of climate change. And so not surprisingly, and Minister Dickinson mentioned it, BIOS has been on the forefront of understanding and being a global contributor to the understanding of how climate change is impacting not just the microcosm of Bermuda, but the globe in general. So I think that's been critically important. Secondly is the reinsurance industry in and of itself. If you quite simply think of reinsurance as the most efficient way to price risk, then the extension of that is that the fact that they were early to the game of pricing risk around climate change and other aspects of ESG. I think the reinsurance market in Bermuda will continue to play that very effective role of pricing risk in the global reinsurance business. And I think that the ability of the Bermudian regulators and the Ministry of Finance and the way that they partner with the business community has been critical for innovation in both the modeling of that risk and the pricing of that risk historically. And we see even more of a ramp up in that partnership as these things become more and more important. And so we really look to Bermuda and the reinsurance market as sort of a global leader in the way that we think about pricing risk in the reinsurance market, specifically around climate change and around stakeholder risk. And I think that the minister also is going to give some stats later, which I think this is also critically important, on the amount of money that has been paid out around catastrophes globally from insurance companies domiciled in Bermuda.
Jim, thank you for that. I wonder if we can stay with you for just one moment as well. You touched upon the expertise and excellence of our key regulator, the Bermuda Monetary Authority, robustly independent and also well-resourced, sophisticated, and yet pragmatic. To the best of my knowledge, the BMA in Bermuda is the only jurisdiction with both full European Union Solvency II full equivalence and U.S. reciprocal jurisdiction status. How well has that information been internalized in the world markets? How do people see the validation of Bermuda's licensure and permits? And does KBR see that as an advantage?
We definitely see that as an advantage. I think two things. I think for the group of people in the financial sector that understand that, I think that it's been a critical aspect of why they tend to see Bermuda as such an important player. One of the things I think that we could do better, that I think everyone could do better, is to get that word out and make sure that the broader financial community, that investors in the Asia Pacific area, even mid-sized investors, understand that relationship, because it's going to be important as they look to increase how they invest in ESG related products and how they view ESG related products internally. And so I think the larger institutions globally understand that. I think getting the word out to the second tier group of investors and issuers around the world is going to be important.
That sounds like sage advice. Minister Jim has touched upon a couple of key themes as we segue back to that theme of getting the word out, as we are here on the podcast, and sadly, the headline grouping key climate-driven risk events of this past period. I wonder if we can invite you to share more of your perspective on any of those themes and what the Bermuda market has been doing to contribute and support climate risk mitigation.
Sure, Steve. Bermuda has been a pivotal player for more than 30 years in mitigating climate risk and building resilience for people, communities, and businesses all over the world. In the United States, members of the Association of Bermuda Insurers and Reinsurers, otherwise known as ABIR, and other Bermuda reinsurers contributed over $65 billion between 2001 and 2017 to U.S. catastrophe losses. The Bermuda market paid 51% of reported liabilities in the New Zealand 2010 earthquake and 38% of reported liabilities for Chile in 2010 when they had an earthquake, and was also a significant contributor paying liabilities associated with the 2011 Japanese earthquake. Bermuda's market is nimble, responsive, and composed of world-class talent that is diverse, tech-fluent, and climate-oriented. Building on that track record to also be a significant player in the climate risk financing arena is a bit of an easy transition. A couple of months ago, the BMA conducted a climate change survey, which they issued in March of 2021. And they observed that P&C companies appear to be more advanced at considering climate risk-related risk in their risk assessment and their risk management processes, given their historical exposure to climate-related risk in lines of businesses such as property and casualty. It also stated that climate change is a high priority for a broad range of these companies. Our own government's initiatives on climate change include reducing the country's carbon footprint, protecting Bermuda's fragile ecosystem, increasing adaptability and resilience, and in particular, investing in climate-focused efforts by taking steps to develop Bermuda's role in climate risk finance. Our regulator, in addition to being committed to strong and robust regulation, has a strong understanding of the market and has and will continue to embrace innovation. By way of kind of just some other statistics for you, KBRA members and other Bermuda insurers have provided 60% of the hurricane reinsurance in Florida and Texas. The same group has paid $22 billion to rebuild the U.S. Gulf and Florida coasts from 7 hurricanes in 2004 to 2005, including nearly 30% of insured losses from hurricanes Katrina, Rita, and Wilma. It is estimated to pay 30% or $30 billion of the 2017 hurricanes Harvey, Irma, and Maria losses, and estimated to pay 23% of 2018 Hurricane Michael losses. Something more recent, we're estimated to pay approximately $2.7 billion or approximately 20% of Texas's 2021 Winter Storm Uri losses. And we paid 16% of reported liabilities for the United States 2012 Hurricane Sandy losses. All told, the Bermuda markets have provided lots of cover and lots of claims payments for property and casualty events over the course of the last 2 decades.
Minister, thank you for sharing those really powerful statistics and numbers. It really is something for the Bermuda market and Bermuda as a jurisdiction to be proud of. It can be counterintuitive, particularly if you come from the equity space, Jim, to be proud of the losses, but that is the product. In the default rate in the Bermuda, under the supervision of our regulating government, from the dawn of the inception of this market to today is zero. Not approximately zero, towards zero, but zero. And I know that the professionals and staff of the companies that have made that track record happen are proud of their contributions to reduce climate-driven risks around the world. Building upon that track record in reinsurance and more broadly, these innovations that we've started to touch upon today, climate-related financing, I wonder how each of you see the role of governments taking a more proactive role to support and potentially create incentives for private sector innovation to mitigate, transition, or adapt the very real risks of climate change, of which we're also aware. Jim, maybe we'll ask you to start.
Absolutely. I think that, you've hit on a topic that is going to be increasingly important. Every global jurisdiction is at some stage of now assessing climate change, its impact, and what they need to do to regulate different aspects of businesses around climate change and stakeholder preference. I think Bermuda is one jurisdiction that is a model for the right way to set this up. And the reason I say that is because it hinges on Bermuda's ability to both prudently regulate and yet bring in different voices from the business community to help make sure that those regulations are that A, they end up having the intended consequence, and B, that there aren't unintended consequences that in some cases could be worse than the rule itself. And the reason that's so important is because the stakes around climate change are so high. If we don't get this right, it's not like we go back and we retool the regulation 20 years from now and all of a sudden, okay, we fixed it. And maybe some people had some unintended losses. If we don't get this right, the planet is in much worse shape 20 years from now, and we may not have the ability to get it right. And so I think the regulatory aspect of this is going to be increasingly important. And I talk a lot about unintended consequences. And we all have seen globally the impact of regulations. In many cases, they work. There are regulations in my own industry that took place after the great financial crisis that have been terrific. They should have been implemented years ago. And they've been great for the industry, and they've been good for the rating agencies as well. But we've also seen regulation that has created unintended consequences that are in some cases worse than the effect that they were trying to regulate. And so because climate change is so important, the stakes are so high globally, it's going to be critical that regulators around the world understand the extent of the problem, understand the prudent goals that everyone is trying to get to, and that in doing so, they bring in voices from all different communities, from the business community, from the investing community, from the stakeholder community, to understand what the impact of regulations could be on each of those communities. And then they talk amongst themselves to make sure that they understand what the impact is going to be globally. So getting this right is going to be critical. Bermuda has a history of getting it right. And so I think if a jurisdiction is looking for a model, Bermuda is the model to look at.
Jim, thank you for that. I concur that looking back, we've gotten it right, and we have challenges as we look forward. Curtis, whether as the leader of a ministry, or the member of what I know is a collegial cabinet, as someone who helps oversee a regulator, can we invite your comments on how we will move forward from here?
Sure. I'd like to thank Jim for the compliments on the Bermuda model. I think we have worked long and hard to create an environment where pragmatism and collaboration are key pillars of kind of how we go about doing things. I would also say that governments need to address the effect of climate change. It's an urgent problem with economic, social, and environmental impacts. If we do not appropriately tackle climate change, the consequences will be severe, affecting the entire planet and its inhabitants. And this will be important for the protection of the sustainable living environment, and in Bermuda for the country and for our stakeholders, but also for future generations who at this juncture have an invaluable opportunity to engage and prepare for the world that they will eventually inherit. There should be comprehensive collaborative plans that involve both the public sector and the private sector. Although we cannot prescribe appropriate actions for other governments, we can certainly share with you some of the work that Bermuda has done in this regard. As a government, we are aligned with the values of the Paris Agreement in order to protect the climate for generations of future Bermudians. Bermuda has also established a culture of climate and environmental stewardship, including passing the world's first conservation legislation to protect young turtles back in 1623. Bermuda Biological Station for Research was established in 1904 and conducts specialized seawater research. Bermuda is the secretariat for the work to conserve Sargasso Sea. The Bermuda Ocean Prosperity Project commenced in 2019 to foster sustainable, profitable, and enjoyable uses of ocean resources. And in 2020, the Climate-Wise Initiative was established with the goal of having Bermuda become the first carbon neutral country in the world. From a regulatory perspective, as I've mentioned previously, our supervisory approach is sound and effective, and it caters to innovation. The BMA has established a regulatory sandbox and an innovation hub. Sandbox allows, within specific regulatory parameters, the testing of new technologies and the offering of innovative products and services and delivery mechanism to a limited number of clients for a limited period of time. The Innovation Hub facilitates interaction with the authority by entities seeking to develop innovative products and services. These initiatives provide a conducive environment for entities to develop innovative and appropriate climate risk finance strategies and products to otherwise assist in addressing climate change. While our location and somewhat isolated location and unique circumstances make it difficult for Bermuda to fully achieve net zero emissions, we will aim to achieve net zero carbon emissions by 2050 by utilizing innovative new technology and conservation measures. And I think the government has a major role to play in this initiative.
Curtis, thank you for that. And I'm always inspired to hear that. And I would direct our listeners, it's easy to find the government statements and proclamations in perspective of the ministers as summarized on the internet. And I would urge our listeners to visit that, as I would urge you to visit Bermuda. Jim, you and I have discussed so often in the past how important it is to measure. You can't allocate capital or make allocation decisions without the ability to measure, but also we need the ability to compare. With that, how do you view the role of credit rating agencies as we move forward on climate mitigation, resiliency, and ESG issues more broadly?
Thanks, Steve. It's going to be critically important. And when we think about how we go about bringing this information to investors so they can make effective decisions that actually not only help their return, but also can make positive impact on companies and their sort of footprint around ESG. I think that the first area to talk about is climate change. While we talk about the hurricane season a lot, and we talk about hurricanes, and they are getting stronger, they're impacting the coastline, but it's something that the world has been used to. And, there were hurricanes in, the Galveston hurricane in 1904. I think the real wake-up call from our standpoint was when PG&E almost went under over the wildfires in California and the impact that had on a company like PG&E. And I think it made investors stand back and say, wait a minute. And it was so unexpected. And so I think that more than anything else has gotten investors to have a more urgent agenda around understanding climate change and understanding the impact that it can have on a company's balance sheet, income statement, and long-term growth plan. Our goal as a rating agency is to make sure that we bring those statistics and that information to bear as part of the rating. So if there is something that could potentially impact the rating of a company or a municipality or a state related to climate change, related to cybersecurity, or related to stakeholder preferences, we need to make sure that we're incorporating that into the rating and make sure that investors understand that. This can be very nuanced and it can be very subtle, but it's important. In addition to that, there's a whole range of information that investors are interested in that have longer term impacts on whether it's the climate or on stakeholder preferences that investors also need to understand. And so in addition to making sure that we incorporate all of the factors that impact the rating and that we use those to help determine the outcome of the rating, that we also include information that we disclose more information around ESG, around climate change, cybersecurity, and stakeholder preferences so that investors are aware of those impacts. I said that this is a subtle analysis, and I'll give you a couple of examples. So we all know that there are industries that have carbon-heavy footprints. But within those carbon-heavy industries, there are industries that are making great strides and moving toward a reduction in their carbon footprint. And so you can't be the type of information provider or rating agency that just comes out and says, well, all these companies are bad because they have a heavy carbon footprint. Therefore, we have a negative view of them from an ESG standpoint. That helps no one. That doesn't help investors. There are a large number of investors that would like to invest in companies, even in carbon heavy, that have carbon heavy footprints that are making strides toward reducing that carbon footprint, and they have a plan to continue to reduce it. There are a number of investors that want to invest in companies like that. And so making sure that we as a third party can validate a company's plans, that they're sticking to it, and that it's actually having an impact can give investors comfort that they're actually investing in a company that fits with their investment guidelines and the types of global initiatives that their investors would like to invest in. And that's just one example. There are many examples. And so rating agencies have a responsibility to provide this very nuanced data. They have a responsibility to provide more information, more disclosure around all aspects of ESG. Second thing I'll say is rating agencies should not be complicit in the greenwashing of the ESG area. And we see it all over. There are many investors that have ESG requirements, and the easiest way to fulfill it is to look at an outside ESG score and just check the box. Just say, yeah, they have a good ESG score. The problem with independent ESG scores is they put too many inputs, most of these standalone ESG scores don't share their analysis, how they got to that final conclusion. And these ESG scores are all over the map. We've had investors from pension funds in Japan to platforms in the US provide us with scatter plots of ratings from all different standalone ESG rating providers on one company. And they range all over they look like like when you shoot a buckshot at a piece of paper. They're all over the board and all over the map. This is unhelpful. And what is even more worrisome is this invites regulation. This invites a regulator to come in and say, we're just going to stop this and perhaps go too far. And so we really believe that the way that rating agencies can contribute to this conversation globally and actually move it forward is by incorporating aspects of it in their rating where it's relevant and by pushing issuers to provide more information around what they're doing relative to ESG and not providing these scores that we think so often lead people astray and contribute to this global phenomenon called greenwashing.
Jim, thank you for all of that. And as a resident of Bermuda and a citizen of the world, I don't think we can stress enough how important the risks and harms of greenwashing are. And we cannot adapt and we will not have the acceleration to transition that we need if tools that misalign capital and strategies take root, as I fear that they might. And for listeners of this podcast, you are likely within the KBRA community already. If you have not already digested the frameworks in respect of ESG that I'd encourage you to read them. The thought leadership that underpins them and the transparency that Cole puts forth are really leaders in the space. And Jim, I want to commend you and the team. Over time, I hope quality will win out. And I might close that as well, as you say there, because with the freedom I may have as the moderator, there's just different forms of dependence. And I think the transparency and clarity that your shop provides are really helpful as a consumer of rating. So thank you for what you've done in the space.
Thank you, Steve. I appreciate that. So, Steve, I'll relieve you of the moderator duties for a second, and I'd like to pose a question to you. I'd like to get your thoughts on how the BDA fits into this discussion. What's the BDA's role in facilitating Bermuda as a climate risk finance hub?
Jim, thank you very much for that. For the reasons that both you and Curtis have shared and shared so powerfully across this conversation, for 3+ decades, Bermuda has been and will remain, without a doubt, the best jurisdiction in which to raise capital, domicile, and operate certain types of global financial services, tech-levered B2B companies. That's been true of reinsurance, and it will be true of reinsurance. It's been true of ILS, it will remain true of ILS. Thanks to the leadership of the minister and his ministry, the BMA, and market participants, we assess at the BDA that in the same way, Jim, as you mentioned, climate change is in every conversation. If you are starting a risk company today, Bermuda is always in the conversation. We want that to be true for climate finance. We assess that if you come out of solar, utilities, manufacturing, fracking, and are moving into the space because the scale of the opportunity and the scale of the challenge is so enormous, it may be the case for you, your advisors, that Bermuda, the cross-border structuring advantages may not be on your prior radar screen. Our mission, as the minister has noted, is to take our story on the road and take it to you, to share with you the attributes of Bermuda that might accelerate your success and reinforce for you that our success is your success. If your business plan is a good fit for our jurisdiction, which thrives with robust regulation, the world's highest standards of cooperation and transparency, and in a very robust human capital environment, you may well be a great fit for Bermuda. We want to share that information with you. And if you decide to join us, we want to make your investment in an operation in Bermuda as seamless as it can be. Come visit us online, visit us in person, and we'll share with you what you need to know. I might ask if you'd like to elicit a closing comment. How would you, from each of you,
Absolutely. Minister Dickinson, would you like to go first?
Sure. First, thanks for the opportunity to participate in today's podcast. And thank you, Jim, and thanks, Steve, for moderating. Just as Bermuda has played a critical role in helping high-risk regions bolster their financial resilience to the rising tide of climate perils, and by that I mean hurricanes, tropical storms, wildfires, floods, and other climate-driven property risk, Bermuda has played a leading role in climate risk finance. With our extensive experience and expertise, our reputation for sound and robust regulation, the demonstrated commitment by the government of Bermuda to such matters, a solid and diverse cadre of experienced industry experts, and a culture that supports and promotes innovation, Bermuda has the key ingredients to foster success and make a significant contribution in these areas that are of paramount importance to the future of our global economy.
Mr. Dickinson, thank you so much for joining us. And Steve, thank you for moderating. We believe, and I'll continue with the theme of my last points, we continue to believe that transparency and disclosure is the way to further how important climate risk, how important stakeholder risk, and how important cyber risk is to the global communities. We believe that as we move forward, the transparent analysis of this information and sharing of this information with stakeholders such as investors, issuers, and regulators around the world is going to be important in their decision making. We have been a thought leader in how to do this. We want to continue to be a thought leader. We think it's critically important. And we think it's critically important that truthfulness, that validation of information, and that transparency around information become the norm when we're talking about climate risk and when we're talking about stakeholder risk and when we're talking about cyber risk. We will continue to argue against standalone ratings that we think too often don't represent anything more than a way to just greenwash or check the box and don't really offer investors any additional information and in fact give them cold comfort. We will continue to argue that these are bad for the industry, bad for investors, and we will continue to be a leading voice in making sure that our ratings include risk around climate change, risk around cyber risk, and risk around stakeholder preferences, and that we continue to advocate for more disclosure on every company, every entity, every political entity around the world so that investors have the information they need to make decisions and regulators have the information they need to make decisions. So thank you for joining us today, and I'll turn it back to Steve.
Tim, Curtis, thank you for those closing statements and for all of the content you've shared across this podcast. The challenges of climate change and the opportunities that are available to help support the transition that the patient need are so significant that we will need both leadership and collaboration. And the spirit with which you've shared all this information today, with which I know you approach these issues, manifests both those values. It was an honor to moderate you. Thank you very much, and thank you for joining us.
Thank you very much to Steve, Jim, and Minister Dickinson for a very interesting discussion. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find the details of KBRA's ESG approach, all of our ESG research, podcasts, and other ESG-related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.